Very good morning, everyone. Hope you all must be doing great. So let's start with the total income questions. If you will look at the screen, just give me a moment. Okay. So directly coming to the question, please look at the screen. Question number 1 says, Mr. Pramod is a resident age 55 years, is a retail trader and furnishes the following information for the assessment year 25-26, and the trading and profit and loss account for the year ended 31st March 25 is given as under. So we have been provided, he is a retail trader, he is not a manufacturer. We have been provided a trading and profit and loss account. So it means that he has a PGBP income. Let us see what is there in the trading and profit and loss account. Opening stock, purchases, transport charges, gross profit. Okay. See, this is a trading account. This up till here, it is a trading account. Here it is a P&L account. In accountancy, I have also told you before as well. In accountancy, we split them into trading and profit and loss account. But in income tax, as far as income tax is concerned, we are not that concerned to divide this. We can in fact make it one. So how we'll make it one? See, it is being divided over here. 72 lakh 90,000, 72 lakh 90,000. It's a total of this one. So what we can do is we can delete this. We don't need it. And here, the gross profit is 15 lakh 15,000. And which is being credited at the credit side, 15 lakh 15,000. We don't need this also. So if we'll delete this, so it is now just a one single statement. So we don't need the balancing figure of the trading account, which is gross profit, which is being taken to the P&L account. We don't need that. So I've just deleted this 1515 debit, 1515 credit. We don't require it. Now it is just one P&L account, correct? It says opening stock, this. See, what we have to see in the debit side, if these are normal business expenses, we are okay with it. But if they are not the business expenses, then we will delete them. It is not PGBP, correct? So opening stock, we are okay with it. Purchases, we are okay with it. Transport charges, we are okay. Salaries, perfectly fine. Rates and taxes, I'm believing that these rates and taxes belongs to business, so we are okay. Admin expenses, depreciation, net profit. So we see generally, just on the face of it, I have not read the information so far. Just on the face of it, all the expenses which are debited right here seems to be a little bit okay. So there is no such expense like which I should specifically disallow. They all seems to be a business expense. Now, guys, I started reading this question. What mistake I made it, I have not seen that what is asked from us. So we should also know that what is actually demanded from us. So what you should do is, look at this. First of all, you should always see that what is required from us. So we are required to compute the total income and the income tax payable by Pramod for assessment year 25-26. So this is a question which is where we have been asked to compute the total income of the assessee and the income tax payable by the assessee. And they have given 3 pointers also, 3 questions also here. It says, the business profit is computed as per the normal provisions and he opts for section 115 BAC. So they are saying that right now this assessee is following 115 BAC, that is default regime. Compute his income as per the default regime. Okay. B point says, if he opts for computing business profit as per the provision of 44 AD and does not opt for 115 BAC. In B point, they are asking that compute his business income as if he is opting for the provision of 44 AD. What is 44 AD? Presumptive income. Because in presumptive income, we generally see the turnover, right? So they are saying that compute his PGBP income as if he is opting for 44 AD and does not opt for 115 BAC. That means 44 AD plus optional regime. We have to compute his tax as per the optional regime. Okay. And the third one, it says, the business profit is computed as per the normal provisions and he does not opt for 115 BAC. Okay. So here they are asking, don't calculate it through 44 AD, calculate it through normal provisions, calculate normally plus optional regime. So what we need to do is we have three points over here, three questions over here. First of all, we have to compute the total income and the tax payable. This we understood that we have to compute the total income and the tax payable. And we have been given three questions over here. First question is calculate normally without presumptive income and follow default regime. Second question is saying calculate presumptive income plus optional regime. Third is calculate normally, not presumptive, plus optional scheme. I believe this is clear to everyone that what we need to compute is. So we need to compute. So now how we will proceed? See, normally here, but this is default, this is optional. So we'll do one by one. So first we can compute this one. We'll compute all his income normally as per default regime. Then we will make some changes and we will get this. We'll make some changes, we will get this also. So we'll do one by one. So don't look at it on all three altogether. Just go one by one. Understood? So total income. So as of now, we see that he has PGBP income. We have been provided with the P&L account. Correct? No issue still here. Now, all the sales. Very good, Deepa. All the sales are through account pay check or through bank transfer. They are telling me that all the sales is through the account pay check. Why they are telling me that all the sales are through account pay check? Because of 44 AD. Because if we have received some sales through cash, then we have to apply 8%. Otherwise, we can apply 6% because everything is through banking mode. I believe everybody is okay with this because all the sales, they are saying first point, all the sales are through account pay check. So see, whatever is the sales is are through account pay check. So we can, while applying 44 AD, we can apply directly 6%, not 8%. If they would have said to us 50% through account pay, 50% through cash, then on 50% I would have applied 6%, on remaining I would have applied 8%. Understood? Now, so we have seen the debit side. Let us see the credit side also. So we have the sales. Sales is a normal PGBP item. Closing stock is a normal PGBP item. Rent of house property, 1,80,000. What do you think? It is directly given. It's a house property thing. It is not PGBP. So while computing PGBP, we will delete this. We will delete this because this will go in house property. Agree? And this is rent of house property. Is it given as house property income or rent of property? Rent of property. So it means that we need to compute the house property income also. By rent of furniture. Guys, what do you think? Rent of furniture is a PGBP income or something else? What is your opinion? Rent of furniture. Very good. Santosh. It should go in IFOS. Very good. Everyone good. It is an IFOS income. Kishore, Darshni, good. It should be IFOS income. Correct, Hari. Okay. First point says all sales are through account pay check. Good enough. Second point says the opening and closing stock are overvalued by 15,000 and 20,000 respectively. The opening stock is overvalued by 15. Okay, look at it one by one. Not together, just one by one. Opening stock is overvalued by 15,000. So this is overvalued. Tell me the correct amount, guys. Tell me the correct amount of opening stock. They are saying the opening stock is overvalued by 15,000. So please tell me what should have been the correct amount. 1 lakh. Very good. Correct, Shagna, Aditya, Hari, Darshni, Joseph. Correct, Santosh. It should be 1 lakh. So what I'll do, I'll delete 15,000 from here. So I'll delete 15,000 from here. what effect it will make to my PGBP? What I should do? Add or less? I am deleting 15,000 expense from here. So if I'm deleting expenses, I am disallowing 15,000. So I'm disallowing 15,000. So I will add it back. I believe nobody will make a mistake over here, because some students make a mistake over here in closing and opening stock. So please just look at it, give it 10-15 seconds, look at it, that what we need to do is, so we are disallowing 15,000 from here. 15,000 is extra expense right now sitting. So I'm deleting my expenses, my PGBP will increase, I will add. Okay. The second thing they are saying, the closing stock is also overvalued by 20,000. So the closing stock is also overvalued by 20,000. It is extra. It should be 190, but we are keeping it 2,10,000. Correct, Darshni, it should be 190. So tell me what adjustment you will make. You will delete 20,000 from your credit side. So if you are deleting 20,000 from your credit side, correct, very nice. You will subtract it because your income is getting decreased, because you are deleting your one of your credit side. Your income is getting decreased. So you will subtract it. Very good. Okay, look at the third one. Okay, screen is visible to everyone. Na? You are able to read it. Very good. Thank you. Good. Thanks, Amar. Good, good, good. Very good. Okay. Third point is rates and taxes include. Rates and taxes. Okay. There are some rates and taxes. 24,000. Okay. They are telling us about this thing. They are saying rates and taxes include GST liability of 5,000. First of all, tell me whether GST is allowed or not. First of all, tell me GST is allowed as a business expense? Yes, it's a normal business expense. It's allowed. We know that subject to 43B also. If nothing is given, we will assume that it is paid. Income tax is not allowed, but GST, custom duties, these are sales taxes. These are allowed. No issues. Okay. Rates and taxes include GST liability of 5,000. So this rates and taxes includes some 5,000 rupees related to GST. They are telling us about 5,000 paid on 1/5/2025, and municipal taxes for the let out property 7,000. Okay, just do one by one, guys. Here they are in third point. They are talking about two things. First, they are talking about the GST liability, and then the municipal taxes. So in this point, they are talking about two things. You should go one by one. Correct? You should go one by one. Don't get confused. Don't confuse yourself by taking it all together. Go one by one. So first of all, look at the GST liability. Guys, it is paid on 1/5/2005. What do you think? It should be allowed or not allowed? It is paid after the year, although our year is ending on 31st March 2025. Our year end is ending on 31st March 25. And we have paid it after this year. Is it allowed or not? Okay, very good. So most of you are saying allowed. Correct. Correct, allowed, because we allow, Pradeepa, we allow if we have paid it up to the due date of ROI. So if the due date of ROI would be 31st July also, 31st July or 31st October, whatever it is. So in fact, it is paid before it, right? It is paid before it. So 43B says that in case if there is any taxes, then it should be allowed if they are paid up to the due date of ROI. So it is paid up to the due date of ROI. So it's perfectly fine with us. So we don't have any issue. So unnecessary, the examiner is confusing you. So tell me, if 5,000 is debited over here, if 5,000 is debited over here, will you do anything or it is correctly debited? Will you do anything or it is correctly debited? It is correctly debited. Very good, Joseph. Aditya, correctly debited. It is correctly debited. So will you do any adjustment? No, please don't do any adjustment. Don't get confused. Don't do any adjustment. You can simply write a note for the examiner that GST liability is paid up to the due date of ROI, allowed. No issues. So please don't do any plus, don't do any minus. Just you can intimate to the examiner in just 2 or 3 words that GST is allowed. And municipal taxes. Now, rates and taxes include municipal taxes also. So rates and taxes includes municipal taxes also. See, if these municipal taxes are related to our business building, then we are okay. But if these municipal taxes are related to something else, then we should not be okay. So municipal taxes includes 7,000 rupees. It also includes 7,000 rupees for the let out property. It is for the let out property, guys. It is for the let out property. Now tell me, is it a business expense or it should go in house property? This municipal taxes we have paid for the property which we have let out. Correct. Deepa, it's not correct. Income from house property. I read income from IFRS. Correct. Everybody correct. Income from house property. It should go in house property expense. It is not a PGBP expense. So what we will do is 7,000 we will disallow. We are okay with GST, but we are not okay with this 7,000. Let us come to the next point. Next point says, fourth point, administrative expenses include 25,000 paid to a donation to National Children Fund. Okay. And a payment for laptop purchase on this date for 60,000 through bank transfer. Again, if you look at the fourth point, they are again, if you will look at the fourth point, they are again telling us about 2-3 points. We'll do one by one. Just if any particular statement contains some 2 or 3 adjustment, just shoot them one by one, right? Don't shoot them together, shoot them one by one. Raju sir, it is paid on 1/5/2025. It is paid on 1/5/2025. It is written paid on. It is written paid on. Even if it is paid on or before. Okay. Okay, everyone. See, GST liability is paid on 1/5/2025 and now everything related to GST liability is ended over here, and municipal taxes for the let out property 7,000. When were municipal taxes paid? It is not given. When were municipal taxes paid? It was not given. So we'll assume that municipal taxes are paid normally during the year. Right? See, they are telling us about the GST. If you look at the sentence carefully, everybody, they are telling us rates and GST taxes include GST liability 5,000 paid on 1/5/2005. Full stop here. Although there is no full stop, but and is there. So it means that everything related to 1/5/2005 is over now, and municipal taxes of 7,000. So they have not mentioned that when municipal taxes are paid. So we'll assume that it is paid during the year, because you understand. I know Raju sir why he is asking, because in house property we allow only those municipal taxes which are paid during the year, not up to the due date of ROI. In house property there is no such concept of due date of ROI. They say that municipal taxes are only allowed on payment basis if it is paid up to the during the year only. So we'll assume if nothing is mentioned, it is paid during the year. I believe everybody is okay with this. Now, okay. Let us come to the fourth point. Very good, Darshni. Come to the fourth point. Admin expenses include 25,000 paid as a donation to National Children Fund. And I'm not reading the remaining line. I'll do one by one. So admin expenses include 25,000 paid as a donation to National Children Fund. Okay. 25,000 National Children Fund. Admin expenses include 25,000 paid as National Children Fund. First of all, tell me what you will do while computing your PGBP. While computing your PGBP, what you will do? Is 25,000 is a PGBP expense or not? Is 25,000 is a PGBP expense or not? So PGBP, it is not a PGBP expense, right? donating to anybody is not a PGBP expense. So first of all, 25,000 you will disallow. It is not a PGBP expense, correct? Added back. It should be added back. And thereafter, we understand National Children Fund. It is allowed in the first category of 80G. 100% deduction is allowed under 80G under optional regime. So when you are following default regime, don't give 80G. But when you are following optional regime, you can give 80G also. So we understand that there is some point of 80G which is came. Got it? Not as a business expense, disallow it. However, in optional regime, allow it as 80G. Correct, Joseph. Okay. Now, let us read the second point of fourth point. And admin expenses include a payment of laptop purchase on 15/5/24 for 60,000 rupees through bank transfer. So admin expenses also include 60,000 rupees. This is the laptop we have purchased. It was on somewhere in May 24 we have purchased. May 24 we have purchased. What do you think what you will do of this? Is it correctly debited or it's a capital expenditure? It's a capital expenditure. So you should disallow it. You should disallow it. It is not allowed because it is not a revenue expense. It's a capital expenditure. And then you should claim depreciation. Correct, Raju sir? Then we should claim depreciation on it. Why? Because it's a capital expenditure. We should have claimed depreciation at a rate of 40%. It's computer, laptop, books, 40%. So it is laptop 40% you will claim. And since it is purchased on May 24, so May 24, if you look at it, it's more than 180 days or more. So full depreciation you will charge. You will charge full depreciation of 40%. Everybody understood? 60,000 I will disallow and then I will claim depreciation on it. All good? Now, fourth point done. Transport charges include 30,000 paid in cash on 1/9/2024. 1/9/24 is September 24 during the year. We have paid transport charges 30,000 paid in cash. Okay, transport charges paid in cash. What you will do? What you will do? What you will do? Correct. Sandosh, nothing, will not nothing by. To the transporter, we'll assume it's transportation for goods. So up till 35,000 we are okay. 35,000 we are okay. See, for other cash payments, 10,000 is the limit. For this, 35,000 is the limit. So if it is 30,000 paid in cash, we are perfectly okay with it. We will not do anything. We'll not do anything. We'll just write over there that it is allowed up to 35,000. That's it. Very good. Guys, you know it. Now, he incurred a loss of 8,000 on sale of equity shares on 10th of February 2025. He incurred a loss of 8,000 on sale of equity shares on 10th February 2025, which were purchased on 10/6/2024. So June 2024, he has purchased it. February 25, he has sold it. Within a year, he has sold it. And 8,000 is a loss. Short-term capital loss, long-term capital loss. Short-term capital loss. So 8,000 is a short-term capital loss. Is it being debited anywhere, credited anywhere? No, we have not found it anywhere. So while computing your PGBP, please don't do anything. We didn't find anywhere in P&L account. They're not saying that it is included in any of the expense. No. So while computing the PGB, we will not do anything. But yes, now we have a capital gain income also, that to negative. That to negative. So this would be set off. So you understand, capital gain has an ego. Big brother has more ego. Smaller brother, younger brother has less ego. Can we set it off from other heads? No. If there would have been any other capital gain, I will set it off from there. Otherwise, we have to carry it forward. Everybody understood? So if we would have been any capital gain are now in next points, then I will set it off from there. Otherwise, we have to carry it forward because we cannot set off the capital losses from other heads of income. Correct? So in P&L account, I will not do anything because it is not disturbing my P&L account. Had it been debited in the P&L account, I would have said, no, it's not PGBP expense. But right now it's not debited also. So it's not disturbing my P&L account. So why I should adjust anything in PGBP? Correct? Pradeepa, Aditya, Rashni, you are okay with this now? With short-term capital loss? Shagna? Now, good. Depreciation includes, okay. Guys, generally, if there is nothing mentioned about depreciation, depreciation was 80,000. If nothing is mentioned, so we are okay with this depreciation. But they are saying depreciation includes 1200 as depreciation on trademarks, wrongly charges 15%. So first of all, tell me what is the correct rate on trademarks? Depreciation rate. It's an intangible asset. 25%. It's a trademark is an intangible asset. 25% is the correct rate. Correct? 25% is correct. We have charged 15% as 1200. We have charged 1200, which is 15%. They are saying, I'm again reading it. They are saying depreciation includes 1200 as depreciation on trademarks, wrongly charged as 15%. So we have wrongly charged it at 15. So 1200 is equal to 15%. So I will charge 10% more. So how much it would be? 1200 divided by 15. Either what you can do is you can either get the correct depreciation. The correct depreciation would have been 1200 divided by 15 into 25. Correct, Amar? 2000. So the correct depreciation should have been 2000. We have debited 1200. So we will debit 800 more. Agree? 800 more we will debit. So we will subtract 800 rupees more from my PGBP so that I can charge exactly correct depreciation, which is 2000, not 1200. I believe this is okay with everybody. Now, he deposited 50,000 in PPF account and has paid life insurance premium of 60,000 rupees. So this is 80C. In optional regime, we will get 80C. So 80G is also there, 80C is also there. PPF is 80C. Life insurance premium is also 80C. Then he paid interest of 70,000 during the year on loan availed in financial year 22-23 for higher education of his wife. Again, repeating, they are saying he paid interest 70,000. Interest is 70,000 during the year on loan availed in, we have availed a loan some 2-3 years back for higher education and we are paying interest on it. So they are actually telling us about what? They are telling us about 80E, interest on education loan. So again, 80E is part of optional regime. So they are telling us about 80E, that 70,000 rupees is the interest. So interest on education loan for self, spouse, wife, children, any student for whom we are legally liable, it is allowed. So it is 80E deduction, but that too under optional regime. So we found that under optional regime, there are 3 deductions which are coming. 80C is coming over here, 80E is coming over here, and 80G is also there. Correct? But these deductions would not be available in default regime. In default regime, we have CCD2, CCH2, and double J. That's it. Now, we have read the question now. Now let us do it one by one. So first of all, I would suggest let us compute the business profit or other income also as per the normal provision, and he is opting for default regime. So right now, let us do by default regime. Everybody with me. Solution 1. First of all, A point, we'll write computation of total income and tax liability of the name of the assessee Pramod assessment year 25-26 and as per default regime. So we have to calculate the total income. We have to calculate the total income. And as I have also said earlier, that whenever your question is regarding the total income, you should see which head we don't have. Always use elimination. Always use elimination method. Which head we don't have? We have only 5 heads. Now it's very easy. You can do it in 10 seconds. Salary income, I don't think that we had salary anywhere. House property income, yes, we have. PGBP, yes, we have. Capital gain, loss, we have. IFOS income, do we have IFOS income? Yes, there was some machinery, etc. So we have IFOS income also. So except salary, we have all these income. Correct, Darshini. Except salary, we have all these income. So let us do one by one. So only PGBP, house property is very easy to compute. Here there is no such adjustments. Only municipal taxes are there. Rent is there. We can easily compute. Interest on loan on house property is not there. So it's very easy. It will not take much time. So we should avoid making note for everything. No, if we'll make making note for everything, it will actually we'll end up spending most of our time in this question. So please don't waste your time. See, PGBP is quite a big calculation. We can make working note for PGBP. For IFOS, for capital gain and for house property, I don't think that we require a working note. Agree? So in examination, generally, so we are practicing. And guys, I'm telling you that if you are practicing these at least 7, 8, 10 total income questions, you would feel very, very comfortable. Then you will be able to understand that what we should follow, right? So during these 4 days, it will give you a very, very good knowledge about these total income questions. Now, everybody, income under house property. So we start with GAV, and I also tells you every time that generally 99% you will not get expected rent things, municipal value, fair rental value, standard rent. No, you will get only actual rent. 99% of the time you will get only actual rent. So here the actual rent was 1,80,000. See, it was written the rent of the building, rent of house property is 1,80,000. So this is the actual rent. And there was municipal taxes also 7,000 rupees, right? 7,000 was here. So GAV was here. We will take actual rent. 1,80,000. 1,80,000 minus municipal taxes paid. 7,000. So this is 1,73,000. This is NAV minus 30% standard deduction. 1,73,000 into 30%, 51,900. We don't have any interest on loan related to this property. So we are with 121,100. Correct, Dashni. 121,100 is my house property income. I believe everybody has written this. Very good. House property we have done. Now PGBP. For PGBP, we'll make working note. That is quite a long calculation. So we'll make a working note for PGBP. Then we have, good hurry, Aditya. Then we have capital gain. But we only have this capital loss. We don't have any other thing, capital gain. So it is actually short-term capital loss. And it was of rupees 8,000 to be carried forward. So it is 0. So I cannot subtract it from anything. So I have to carry it forward. So I've shown it over here. Now no need to show it anywhere else. So we have shown it that capital gain, there is a negative 8,000, which needs to be carried forward. Then we have IFOS. Rent of furniture 120. Nothing else is mentioned over here except this. So IFOS is rent of furniture. Rent of furniture 120. So we have our 4 heads, and then we'll have our gross total income. Then we will give deductions. Correct? I think everybody has done till here. Very good. Now, let us make the working note of PGBP and fill it up. We need to fill here up so that we can get our GTI, then the total income. So on the next page, start with your working notes. Working note, PGBP. How we compute PGBP? It's very easy. Now we all know there are 4 steps. Step number 1, start with your net profit. Net profit as per P&L account. It was 10,46,000. 10,46,000. Step 2, look at your debit side. Let us not look at the information. Let us look at the debit side only, right? Opening stock as of now. Let us not look at the information. We'll look at the information in the 4th step, right? Opening stock, we are okay. Purchases, we are okay. Transport charges, we are okay. Salaries, we are okay. Rates and taxes, we are okay. Admin expenses, we are okay. Depreciation, we are okay. Right? Just look at step number 2. I'm not adjusting anything. We'll do every regarding information, we'll do in step number 4, right? So step 2, we are perfectly okay with it. All the expenses which we find, prima facie seems to be okay with me. Step 3, sales we are okay, closing stock we are okay. Although closing stock there is an information, but that we'll see in step number 4. Sales we are okay, closing stock we are okay. Rent of house property we are not okay. Rent of furniture we are not okay. So we'll delete these 2. Delete these 2 because this is not PGBP. Everybody agree? This is my step 3. What is step 3? I'll look at my income side. Whatever is my PGBP or deemed PGBP, we are okay. Anything which is not my PGBP, I'll delete it. So I'll delete this 180 and 120. So I will say less. Rent of house property 180 should be deleted. Rent of furniture 120 should be deleted. Step 1, net profit. Step 2, expenses side. I could not find any problem with the expense side. Just looking at the P&L account. Just looking at the P&L account. There is something information that I'll look at in now the 4th point. Step number 3, income side. Anything which is my PGBP, I'm okay. Anything which is not my PGBP, I have deleted. Everybody, I believe, is fine with this. Now let us come to the information. Correct? Now let us come to the information. The first information says all sales are through account pay check and through bank transfer. So I don't have to do anything right now. That I'll be using in my presumptive income. Point number two, opening stock and closing stock was overvalued by 15,000 and 20,000 respectively. Opening stock was overvalued by 15,000. So we have already understood that opening stock we have shown extra overvalued. We'll delete that 15,000. So what we will say, if we are deleting our expenses are getting disallowed. So we'll add back, our profit will increase. Add opening stock overvalued 15,000 less closing stock overvalued 20,000. All good with this? Closing stock, we are showing it extra 20. We have deleted extra from our income side. We are deleting our income side. It means my income would be reduced less. No doubt on it. Everybody, no doubt in it. Now, rates and taxes include GST liability. I don't have to do anything about GST liability. We have understood. We'll just write a note at the end. We'll just write the note in the end. So here I'll write a note at the end. Municipal taxes of 7,000 was also debited. So that is not a PGBP expense. It is also debited in my P&L account. It is disturbing my P&L account. Correct? Anything which is disturbing my P&L account, I will say no. So 7,000 was debited. I will say no, it is not my correct expense. So I will add municipal taxes related to house property. 7,000 I will add. I am deleting my expense. My profit will increase. Then fourth point, admin expenses. Fourth point says admin expenses includes 25,000 paid as a donation for National Children Fund. So we know that this is not a PGBP expense. Here we'll get 80G. So I will delete this expense of 25,000 also. Donation to National Children Fund. This is not my business expense and I have debited it. I will not allow it. Then 80G would be allowed, but not in default. It will be an optional, not in default. Then there is a payment of laptop on 15/5/2024 for 60,000 through bank transfer. This is also debited 60,000 rupees. It is, since it's a capital expenditure, I will not allow it. Purchase of laptop 60,000 I will not allow it, but I'll allow the depreciation on it, because incorrectly our assessee has taken it as a revenue expense. It was not a revenue expense, it was a capital expense. So first of all, we will say just bring it back to capital expense. Now since you have brought it to capital expense, charge depreciation also. So less depreciation on laptop, 40% of 60,000 because it is full year. So it would be 24,000. Everybody is okay with this 60 and 24? Correct? Then transport charges include 30,000 rupees in cash. Will not do anything. It is perfectly okay. We'll write a note. That's it. We'll write a note. We are perfectly okay. 6th point is he incurred loss of 8,000 on sale of equity shares that we have taken. Will not do anything because it is not disturbing my P&L account. So I'll not do anything. Depreciation includes 1,200 as depreciation on trademark. It should be 2,000. We have to allow 800 rupees more. Depreciation on trademark. 1,200 divided by 15 into 2,000. sorry, 1200 was equal to 15%. So it should be 25% into 25. It is 2000. Already debited. We should allow 2000, but we have already debited 1200. So 800 will all debit. Will all debit it. Will show as an expense. So if we'll show it as an expense, my profit will reduce. Everybody is agree with me? I have written 800 in negative. Why? This is an extra depreciation I have to charge. And if it's an expense, my profit will reduce. No problem till here. Then he deposited 50,000 PPF account and LIC. It is not disturbing my PNL account. It's not debited anywhere in PNL account. It is simple an ATC deduction. So I will not do anything in my PGBP because it is not disturbing my PGBP. Correct now? It's not written anywhere now that it has been debited in my PNL account or credited in my PNL account. No, it's not disturbing my PGBP. So why I should take care of it in PGBP? I'll give ATC. Similarly, he paid 70,000 as interest. It is also not disturbing my PNL account. So I will not disturb my PGBP. So I think that now I have done with PGBP. So we have done all 4 steps. So please tell me how much is my PGBP income. Can you please tell me? Correct. It's not 8,000. It's 800. Correct. It's 800. $808,200. Okay. $808,200. Correct. 808,200. So I'll take it over here. 808,200. 121,100 plus 808,200 plus 120, 10,49,000. Is it okay? 10,49,300. Correct. And see, although you can skip it, but still 80C deduction is there. Okay. 80C deduction is there. 80G deduction is there. 80E deduction is there, but we will not allow anything in default. We are actually doing by default regime. So these 3 deductions are there in this question, but we cannot allow it. So my total income would be 10,49,300. This is my total income. 10,49,300. 80C is there, 80G is there, 80E is there, but it is not allowed in default regime. So 10,49,300 is my total income. And now we have to not only include the total income, we have to tell him the taxes also. So tax on above. So whenever you have to calculate your taxes, just see whether we have any special income. 111A, 112A, 112, we don't have any of the income which is included over here. We don't have any casual income. So we don't have any special income. So directly we'll apply the slab rates as per the default regime. So tax on above, you can directly calculate also. And if you want, you can show it also. Tax on above, first 3 lakh is nil. Next 3 to 7, that is 4 lakh. 5%, 20,000. Next 7 to 10 lakh. Next 3 lakh, 10%, 3,000. And I believe remaining is this 49,30,100. Remaining 49,300 at a rate of 15%. 7,395. $5,7,395 57395 plus there would be no surcharge because my income is not going above 550 lakh. So it's only 4% health and education cess. 2295. 59690. Tax liability. I have ignored the decimals. 59691 also you can write, then you can have to round it off to 59690. So I have actually ignored the decimal so that I don't have to round it off. That's perfectly fine. Everybody is done. So this is the first part. And in fact, now the other parts would be very easy. I believe everybody has done this. Very good. No problem up till now. Now see, A part was saying compute tax liability as per compute total income normally without any presumptive income and optional default tax regime. Let me directly come to part C. Presumptive income, I'll calculate it the last. Let me come to part C where we have to calculate the total income normally plus optional regime. Okay. Now guys, we don't have to do the entire exercise again. We don't have to do the entire exercise again. This is how you should do in your examination. Now just see, you should take the GTI. You should take the GTI which you have calculated through optional or default regime. Whatever you have calculated first, take GTI in the next part also. So here we have calculated default regime first. So let us start with the GTI of it. Okay. So what I'll do, I'm straight away coming to the C point where I have to compute total income and tax liability. Total income and tax liability as per optional regime. So how you should do it? Straight away, you have to start with the GTI. Whatever the GTI you have calculated in the first one, just start with that. Gross total income. As per default. Because you have already calculated through default, take this as a base. So we have calculated our GTI as 10,49,300, right? This one. 10,49,300. Now we will adjust it so that I can do adjustment. Of my optional regime because I need total income as per optional regime. So what I'll do some little adjustment so that I can get the optional regime. So first I will look, and it's very easy. I've already talked about that what is the difference between optional and regime and default under various heads. It's a very, very minor difference. In salary, there is only minor difference. Generally, standard deduction. There it is 50,000. There it is 75,000. Right. There are some allowances also where there is a particular difference. In house property, what is the difference? In house property, generally for self-occupied property, the interest is a difference. In default, we don't allow that interest, but in optional, we allow self-occupied property interest. In PGBB, there are only three differences. What are those? Additional depreciation, outside research, and 35 AD, specified business. Only three differences. Then capital gain, almost there is no differences. IFOS also, generally there is no differences. Only in family pension, there is 15,000, 1/3 or 15,000, whichever is lower. In default, it is 1/3 or 25,000, whichever is lower. So there is not much differences as far as these 5 heads are concerned. And generally, this GTI is made up of 5 heads. So let us see. That as per default or as per optional, what would have been the difference? See, this 10,49,000 has been made up of this 1049 has been made up of house property, PGBP, and IFOS. Okay. Tell me, guys, in optional and in default, only the differences in house property is self-occupied property. First of all, it's not a self-occupied property. So I believe that it is same in default and in optional. It is same. All agree? In PGBP, there are only three differences. Additional depreciation, there is no additional depreciation. Second is outside research, there is no outside research. Third is 3580 business, there is no 3580 business. Only three differences are there. And in this question, none of them is there. So I believe that this is also correct. I believe that this is also correct as per optional and default. Now, IFOS 120, it is same in default also, in optional also 120, there would be no difference. So 10,49,300, which I have calculated through default, in fact, it is same as optional. Understood? So to explain it, I have taken some time, but in your examination, you will not take hardly 10-20 seconds to identify it. So there is no adjustment as such. So there is no adjustment as such as far as this question is concerned. So 10,49,300 is my GTI through optional regime also. Because there is no difference in this question. Now, less. Chapter 6A deduction. Chapter 6A deduction would be there. So what it would be? A TC is there. He has paid his life insurance premium and PPF. How much? Life insurance premium he has paid 60,000. Sum assured is not there, so I'm okay with it. 60 and 50. $1,50,000 is the deduction under 80C. Then 80E education loan. $70,000 was there if I'm not mistaken. Correct, 70,000 was interest on loan. 80E. Then 1,10,000. Correct. 1,10,000. Correct. Lastly, correct. 80, 70,000. And then 80G. It was to National Children Fund, and it is 100% deduction is allowed. 100% deduction to National Children Fund. So 25,000 was there. That's it. The total deduction which we can take it. So it is coming as 8,44,300. This is the total income. Now compute your tax. It does not have any special income. Now compute your tax one above. As per optional. So again, just check whether it has any special income. It does not have any special income. So we can directly calculate through slab rates. What is the slab rate? Is this person, you have to see the age also, na? This person is not senior citizen. So normal 2.5 lakh slab. First 2.5 lakh nil. Next 2.5 lakh 5%. 12,500. 5 to 10. So remaining 3,44,300 at a rate of 20%. $68,860. So this is 813. It is after cess. 81360 plus 4% health and education cess. Okay, correct. This is the tax liability rounded off. 84,610. So they were also asking the last point, they were also asking that which option is advantageous to promote. So as of now, although we have not calculated the presumptive income one, but let us compare this 84,610, and as per default regime, it was 59,610. So as of now, out of them, default regime is actually better right now. Correct? Correct. Default regime is better. Now, let us do, I believe everybody has done this. Now let us complete that B point also, where we have to compute our PGBP income as per presumptive basis. We have to calculate total income. We have to calculate total income and tax liability also. But here our PGBP would be on presumptive basis. And this we need to calculate as per optional regime. They were saying optional regime. Correct? Okay. See, only PGB would be in presumptive basis. So what we have house property, it will remain same. PGBP will change. Capital gain, so we have negative, so I'll not write it again. So there is no point in writing again and again that we will be setting it off. We have already mentioned it. Then we have IFOS. House property, there would be no change. 121, 120, 120. Understood? Now, what would be the PGBP? PGBP, they are telling me through presumptive, and we understand this person is into a business of wholesale trade or retail trader. So we understand the sales. Guys, what is the requirement of 4480? What is the requirement of 4480? That the turnover should not be more than 2 crores. The turnover should not be more than 2 crores. So the turnover is 70,80,000. So we are okay with it. And also in 4480, it is said that your turnover can be between 2 crore to 3 crore also. If you are mostly, all your receipts are mostly are coming through banking mode. 95% of them are coming through banking mode. Only 5% cash is allowed maximum. So here everything is coming through banking mode. So for this person, 3 crore limit is applicable. But right now his total in his sales is 70,80,000. So within very much in our limit. So no problem. We can allow 70,80,000 into 6%. Why not 8%? Because everything is collected through banking mode. So 70,80,000 into 6%. It is 70,80,000 into 6%. 424,800. $665,900. Correct. This is the total. This is the GTI. And since it is through optional regime, so we'll give 80C also, 80E also, and 80G also. And now I'm not be writing it again and again. Directly, I'll be taking that how much we have taken 1,10,000, 70,000, 180, and 25,000, 205. So it is 460,900. This is the total income under optional regime. I think after rebate it will become zero because it is not more than 5 lakh rupees, right? There would be a rebate also in optional regime up to 5 lakh rupees of total income. So text one above 460, 460,900. 10,545 less rebate Why? Because my total income is not going above 5 lakh. So rebate would be tax on income 10,545 or 12,500, whichever is lower. So 10,545. So my tax liability will become nil. So you have to mention that this is the best option. So you can advise that this is the best option. Here my tax liability is going to be nil. Tell me once everybody has done it. Very good. Very good. Let us come to question number 2. This question says, Mr. Basim, a resident individual age 52 years, provides management consultancy services. Still, what I should do is, I should actually first look at what is asked from us. So you look at it at last. You will find it is asked from us, you are required to compute the total income under proper heads of income of Mr. Basim. Simply, we are required to compute the total income, okay, of Basim for assessment year under regular provision of Income Tax Act. Regular means not presumptive. Assuming that he has not opted to pay the tax under 115 BAC, also calculate the total tax payable by him. Okay. So what we need to calculate, we need to calculate the total income plus his tax payable as per optional regime. That's it. So they are saying me that calculate the total income plus tax payable as per the optional regime. Okay. Look at this. Let us see that how, from which sources he is getting his income. So Mr. Basim is a resident individual, age 52 years. Okay. He's not a senior citizen again. Provides management consultancy services to various corporates and non-corporate clients. Okay. So he's into profession. He's providing management services. His income and expenditure account for this year is given as handout. His income and expenditure account and P&L account is same thing, right? Receipts and payment account is a little bit different. So probably tomorrow I'll be taking the question of receipts and payment account also. But P&L account and income and expenditure account is same. See, if you look at it, so excess of income over expenditure, this is nothing but net profit. So this is nothing but net profit. So this should be our base to start the PGBP. First of all, look at his expenses and let's find that if there is any expense which we think that it should not be his business or profession expense. Okay. First is employee remuneration. Guys, we are okay with employee remuneration. It is salary. So we are paying it to employees. So it is a business expense. I'll see that if there is anything on in the information, but as of now, it is completely fine with me. Employee remuneration, I'm okay. Office and admin expenses, normal business expense, we are okay with it. Rates and taxes, if it is for business, we are okay with it. Interest expenses, again, if it is related to business loan, then I'm okay. But if it is for personal loan, then I'm not okay. But as of now, nothing is mentioned. I will take it as a business expense. Office rent, I'm perfectly okay. This is office rent. Insurance premium. Now it depends what type of insurance premium it is. If it is related to business, then we are okay. But if it is related to personal, then we are not okay. Agree? Professional fees, we are okay. Depreciation on computers, see, we can give depreciation on our assets. So on computers also, we are okay. So as of now, while reading my debit side, I have not read the information. I found that all my debit side expenses are more or less okay with it. Okay. Now, credit side, gross receipts from profession. So he is receiving gross receipts from profession. Last year it was 75 lakh. Okay. Last year his profession receipt was 75 lakh. Why they have given for the last year? Probably regarding TDS. Because they are saying, because we understand. Do you understand that big individual or big HUF or small individual or small HUF? So whose turnover of the last year of business is more than 1 crore, he's a big individual, are supposed to deduct TDS. Or in case of profession, if the last year turnover is more than 50 lakh, then you are supposed to deduct TDS wherever applicable. So this, why they have given the last year turnover? Probably because that this person is eligible. He's a big individual or HUF. He is eligible to deduct the TDS. Understood? Now, gross receipts. Now forget about this. Now forget about this. Now read it like this. Gross receipts from profession, 60 lakh 60,000. No TDS was deducted from any of the receipts. No TDS was deducted from any of the receipts. What does it mean? Guys, he is a professional. He is a professional and he is rendering services to various clients, various corporate clients, non-corporate clients. We all know, let's say, for example, you are a, or not for example, but you are a chartered accountant. Let's say you are a practicing chartered accountant. You are a practicing CA. You have your PGBP income, agree? So you would be making your P&L account or income and expenditure account. It's your, right? You have a CA firm and it's your CA firm P&L account. Correct? Guys, you give services. You give services to various clients. You give services to various clients. Client number 1, client number 2, client number 3. Let's say to client number 1, you have given the services of 10 lakh. He will pay 10 lakh rupees to you. But since he is paying to a professional, since this company is paying to a professional, they will deduct 194J TDS at a rate of 10% on professional services. Everybody agree? Everybody agree? Since you are a CA, you are providing it to a company, 1 lakh rupees of services, 10 lakh rupees of services, they will deduct 10% TDS of yours. Everybody agree? And what you will receive, you will receive 9 lakh rupees. Why? Because 10 lakh into 10%, 1 lakh, they will deduct your TDS. And you will receive 9 lakh rupees. That is your net of TDS. Have you understood this or not? Everybody, have you understood this or not? Correct. This is the net amount. Guys, if you will write over here by gross receipts, in your P&L account, if you write gross receipts 9 lakh, which is net of TDS, after TDS, guys, please tell me whether 9 lakh is your income or 10 lakh is your income. You all know that we have to take it to the gross level. Everybody agree? You all know that we have to take our income before TDS. So everybody is agree with me now that your income is not 9 lakh, your income is 10 lakh. So if you are showing as 9 lakh, so for computing PGBP, I will add 1 lakh rupees more. If you are showing at 9 lakh, I will add 1 lakh rupees more in your PGBP because it is your gross. It should be taken at your gross amount before TDS, not after TDS. Your income is, as a CA, your income is 10 lakh rupees, not 9 lakh. Everybody is okay with this or not? All okay that we have to take our income before the TDS. Okay, very good. Guys, if we have given some services to client number 2, 194J says that if it is more than 30,000 rupees, then only TDS will apply. We have given the services to client number 2, let's say of 25,000 rupees. So he will not deduct TDS. Why? Because what he is paying is 25,000 rupees is not more than the threshold limit of 30,000. So what he will do, we have provided him services, charge 25,000. He will pay us 25,000 rupees only. He will pay 25,000 rupees only. So we have written 25,000 rupees gross receipts. And on this, no TDS was deducted. No TDS was deducted on this receipt. On this receipt, because for us it is a receipt. For a CA, it is a receipt, and no TDS was deducted. Guys, tell me, will you make any adjustment, or this 25,000 rupees is perfectly fine? Will you do any adjustment, or this 25,000 rupees is perfectly fine? That person has not deducted any TDS. Everybody's okay now? It is perfectly fine because we have to take before TDS, and in fact this was before TDS only. There is no TDS amount from this. So I believe that everybody is perfectly fine with it. Okay, guys, let's say these types of clients, we have hundreds of clients like this. We have hundreds of clients like this to whom we are offering service of 25,000, 25,000, 25,000, 25,000, so on. Guys, they will not deduct my TDS now. So I will receive total of gross receipts how much during this year? 1010 more, 25 lakh I will receive. Whether I should adjust anything or we are fine with 25 lakh. Whether we should adjust anything or we are okay with it. We are okay with it because these receipts which you have taken, no TDS was deducted on it. So we don't have to adjust anything. See, if TDS, we are showing it this 9,000 where TDS has been deducted, then we have to take the gross amount. But if it is already in gross amount, then why I should make any adjustment? I believe that now you will understand this particular line. No TDS was deducted from any of the receipts. He has received 60,60,000. There could be thousands of clients from whom he has charged 2,000, 3,000, 4,000, 10,000, 15,000, and so. None of which there is no TDS implications. So tell me, are we okay with it or not? Should we make any adjustment or we are okay with 60/60? We are perfectly. Have you all understood now this? No TDS was deducted from any of the receipt. We are okay with this amount. Otherwise, if this would not have been written also, then also we would have been okay. But if it is written over there that TDS was deducted on this, so we assume that since we are a professional, so this is actually equal to 90%. So I will take it at a gross value. But right now we are okay. And this thing which I have deleted, it has nothing to do with this. It is just the last year receipts. That's it. So it is just the last year receipts they have mentioned. It was 75 lakh to tell you that he is a big individual. Okay. Now, by interest on saving account, tell me, interest on saving account, is it a PGBP income or a IFOS income? It's an IFOS income. And as soon as we will see this word saving, we understand this person is following optional regime. We will take 80 TTA also. We will take 80 TTA also. He is not a senior citizen. He would have been a senior citizen. I would have taken 80 TTB. But here 80 TTA. TTA is maximum 10,000. TTB is maximum 50,000. You understand? Winning from lottery. Net of cost of lottery tickets 500. Okay. This is not net of TDS. It is net of lottery tickets. See, obviously TDS would have been given over. TDS would have been deducted, but we have not shown after TDS. We are showing before TDS. It is just for net of lottery ticket. What does it mean? There is a lottery ticket of 500. Actually, this person has won this lottery. He would have won this lottery of 1 lakh rupees. But since he has purchased a lottery ticket of 500, so he has made it as an expense, and he's showing 99,500 is the net income which he has earned. There is no role of TDS right now here. So tell me whether any expenses are allowed from casual income. No, you don't allow any expenses from the casual income. So you should actually take it First of all, it is your IFOS income. And in your IFOS income, please take 1 lakh rupees. Please take 1 lakh rupees, not 99,500. Agree? In your IFOS income. Tell me in PGBP what you will do. Tell me in PGBP with amount. Tell me with amount what you will do. With amount. In PGBP what you will do. Dashni, with amount. Will you subtract 1 lakh or you will subtract 99,500? You will subtract 99,500. Whatever is disturbing my P&L account, whatever is sitting in my P&L account. So please don't do 1 lakh. Whatever is over there, while your PGBP, subtract 99,500. And when you take it to IFOS, take it 1 lakh rupees because you have received 1 lakh. And since you have to compute the tax payable also, at the time of tax liability, after that TDS would also be there, because we understand on winning from lottery, etc., TDS is always there. Although he has not shown TDS, but yes, TDS would also be there. 1 lakh into 30%, 30,000 you will also claim as TDS. Tax liability minus TDS, tax payable. So I believe that in this question they are asking about tax payable. So it should be after TDS. Understood? So 30,000 is also the TDS. Right now they have not shown it, but there you have to show it. Rent received 240. So this is again not your PGBP. So I would assume if nothing is mentioned, I would assume it's a house property rent, house property income. If they will say anything else, which rent it is, then I'll work accordingly. But generally, house property. Now, they are saying employee remuneration includes a sum of 3 lakh. Employee remuneration. They are telling about this. Employee remuneration. This remuneration includes some amount of 3 lakh. Let's see what they are talking about. This 3 lakh. Employee remuneration includes a sum of 3 lakh paid to his wife, Mrs. Beena, who is working as a manager in his office. Okay. So 3 lakh we have paid to the spouse. Can we pay to our relative? Yes, we can pay to the relative if it is at fair market value. If it has fair market value, we can pay it. If it is we are paying, what we are paying is more than the fair market value, then we will disallow the excess amount. So if it is at fair market value, what is fair market value? To others also we pay the same amount. To others also we pay the same amount. And to relative also we are paying the same amount. So it means it's fair market value. But right. But if to others we pay something else, to relatives we are paying it more. So that excess is not allowed. Correct? Employee remuneration includes a sum of 3 lakh paid to his wife, Mrs. Beena, who is working as a manager in his office. She does not have any technical or professional qualification. She does not have any technical or professional qualification experience required for the job. Guys, she does not have any technical or professional qualification experience required for the job. This is a point of clubbing, right? In clubbing, we used to read this. Now, the payment of salary was as per the market rate in comparison to the similar work profile. So first of all, they are telling us that this payment is as per the market rate. So for similar work profile, we pay 3 lakh. To our wife also, this assessee has paid, to his wife also, he has paid 3 lakh rupees. So it is as per the market standards. It is as per the market standards. So we have a section 40 capital A2, which says that payment to relative more than the market price is not allowed. So right now 40A2 will not be attracted because 3 lakh is what is market standard and we are paying as per the market standard. So in business PGBP, we are completely okay with it. 40A2 will not say anything because it is as per the market standards. Second, we have paid to the spouse and we are substantial owner in this business. In fact, he's 100% owner. So in this case, the spouse is getting a remuneration from this concern where the individual has the substantial owner, 20% or more ownership, and here he has 100% ownership. And if the spouse receives any remuneration without any qualification or skill, so that income will be clubbed in the hands of the individual. So guys, here PGBP, there is no problem, but clubbing section will be attracted over here. So this income would be clubbed in the hands of the assessee. Understood? So here PGBP, there is no issue, but clubbing provision will be attracted. Everybody understood this or not? PGBP will not be there. Why? Because we are paying as per the market rate. We are paying as per the market rate. So if we would not have been paid as per the market rate, then it would have been disallowed, excess amount. But right now we are paying at the market rate. So we have no issues with it. So PGBP, we have no issue, but clubbing provision will apply. Okay. What is clubbing provision now? Clubbing provision says that whatever the income of the transferee is, of which head it belongs, it should be clubbed in the same hand. So please tell me, in the hands of wife, this income belongs to which particular head? Out of 5 heads, what do you think? If this would have been taxable in the hands of wife, it would have been under which particular head? Salary. Correct. And what would be her salary income? Can you tell me what would be her salary income amount? Computed. Optional regime they are following. Computed. Compute in the hands of the wife. Santosh, correct. 250. Why 250? Because she is receiving salary from here, 3 lakh. She is receiving salary from here, 3 lakh. And when she will be making it her income, she'll be making gross salary, whatever it is, basic salary 3 lakh. Gross salary 3 lakh minus standard deduction 50, 250. Very nice. So please remember, guys, what is clubbing? Clubbing means that first of all, compute the income of the transferee. Compute the income of the transferee. Then the final amount, you should club it. The final amount, you should club it. So please tell me how much you will club over here. 3 lakh or 250? How much you will club over here? 3 lakh or 250? The final amount you should club, it is 250. Everybody understood? It's a very tricky adjustment. I believe that you understood it. So it will be clubbed in the hands of Mr. Bhasin under the head salary 2,50,000 rupees. So it would be a salary income also 250. Very good. Look at the second adjustment. Look at the second adjustment. Second adjustment says Mr. Bhasin owns a big house with 2 independent units. Unit 1, 50% floor area. Okay. He has a big house with 2 independent units. Unit 1, 50% floor area. Okay. Let me make it for you. So he has a big house with 2 independent units. Unit 1, 50%. Unit 2, 50%. You are not required to make it. Just understand this. So he has unit 1. They are saying unit 1 is 50% floor area. And unit 2 is also 50% floor area. Okay. It's a big house. It's a big house. I'm reading it again. Mr. Bhasin owns a big house with 2 independent units. Unit 1 with 50% floor area. So it obviously makes sense that unit 2 is also 50%. It has been let out for residential purpose at a monthly rent of 20,000 for the entire year. Okay. And this unit 1 is let out for rupees 20,000 per month. Okay, this unit 1, which is for 50% area, this is a let out property. This is a let out property. And for the entire year, the rent is 20,000 per month. House property income, no issues. House property income related to this. Now let us see what is the remaining. Now, unit 1, we don't have any issues. Now, look at unit 2. Now, look at unit 2. Unit 1 we have done. It's an house property purely. Look at unit 2. With the balance 50% of the floor area. Okay. This is the balance 50% of the floor area. Now, they are talking about this unit. Okay. Is used by Basim as his residence cum office. It is used by the Basim as his own residence also and on office also. Can I say, now they are silent. Can I say, because when you use your own residence, it is called self-occupied. And if you use for your own office or business, it is called PGBB, professional income. Everybody agree? So if they have not given, they are saying that the second half is used for residence also and office also. So I should make an assumption that this area, 50%, is divided now into two parts, 25-25. This 50% is now divided into two parts, 25%, 25%, which is used as residence, that is self-occupied property. And this 25% is used as in business and profession. Guys, are you all okay with this? 50% I have divided 25-25, and this is 50. So this is let out property. This portion is self-occupied, and this portion is PGBP. Everybody is okay with this? So they have actually given, very good. So they have actually given that the remaining area is used by Basin as his residence cum office. Residence cum office. So they have not given it. So it's an assumption. Residence cum office. So it's an assumption that half of which is for residence, half of which is for office purpose. It's an assumption. So we'll take this assumption. Correct. It's an assumption. Because we don't know how much is for office, how much is for residence. So if we don't have any other thing to identify, we'll directly take an assumption, half. That's it. Okay. Guys, let out property, you all know, belongs to house property. Self-occupied property is also somewhere else, or it is in house property. It also goes in house property. And this will go in PGBP. This will go in PGBP. So any expense, let's say for the entire house, any expense for the entire house, can I say 50, 25, 25? 25% of this is PGBP expense. So let's say, for example, we have paid municipal taxes. We have paid municipal taxes of this house. So this 50% of municipal taxes is related to let out. This 25% related to this self-occupied, and the remaining 25% would be related to PGBP expense. I believe that everybody is clear on it, that how we have divided it. So all expenses will be doing it accordingly. 50%, 25%, 25%. Other particulars of the house are as follows. Okay. Other particulars of the house are as follows. Okay. For the entire house. Municipal value 360. Fair rental value 420. Standard rent 4 lakh. First of all, tell me the expected rent of the house. Everybody, I believe that it's very easy to tell me the expected rent of the house. So what we take? Municipal value 360, fair rental value 420, whichever is higher 420, compared to standard rent, whichever is lower 4 lakh. This is for the entire house. This is for the entire house, right? Other particulars of the house. Can I say that the expected rent of this house is 4 lakh? So can I say that the expected rent of this let out property is 2 lakh? Everybody agree? This is the expected rent 2 lakh. Why? Because they are saying for the entire house it is 4. So for this let out property is 2 lakh. Okay. And guys, what is the actual rent of this? Actual rent receipt or receivable of this? 20,000 into 12, 240. Expected rent is 2 lakh, actual rent is 240. So I believe 20,000 per month, right, Aditya? So it is 2 lakh or 240, whichever is higher. So I believe that the GAV would be 240. Expected rent or actual rent, whichever is higher. So for this particular property, we'll get GAV as 240. Correct? Guys, for self-occupied property, we start with NAV and we take the NAV as nil. So here for this portion, we'll take the NAV as nil. So for self-occupied property, we take NAV as nil. And here we'll not take anything because this is PGBP. Here we don't take GAV, NAV, etc. So this is PGBP. So here the GAV is 240. Here the NAV is nil. And here nothing. No house property. I believe everybody is clear on this. No confusion. Very good. Now, guys, all the expenses for this house should be 50% here, 25% here, and 25% here. Rates and taxes include a sum of rupees 10,000. Rates and taxes. So there were some rates and taxes. This one. This includes a sum of 10,000. So they are talking about 10,000. Right? They are talking about 10,000. Remaining 5,000 were okay. What is remaining 5,000? This is 15 now. So we are talking about 10,000. Remaining 5,000, we are okay with it. Because some students get confused, sir, what about that remaining 5,000? Nothing is given. So it means that is perfectly okay. We are not okay with 10,000 rupees. That is the reason they are giving us the information regarding 10,000 only. So it says, third point, rates and taxes include a sum of rupees 10,000 paid as municipal taxes of the house. Guys, municipal taxes of the house. They have paid as municipal taxes of the house. Can I say that municipal taxes of the house, it is 10,000 rupees total? Can I say for PGBP, it is only 25%, 2,500? Everybody okay with it now? For PGBP, it is only 2,500. So out of 10,000, 7,500 is not PGBP. 7,500 is house property. It's not PGBP. But since we have debited the entire 10,000, but we should debit only which is related to PGBP. So 25%, 2,500 we are okay. 7,500 I will disallow it from it. So 7,500 I will disallow it from. So here 75,000 is disallowed. And can I say also say, let us talk about house property also. So if 10,000 is the for the total house, how much is for let out portion? 5,000. How much is for this portion? In fact, for this portion, I don't take municipal taxes. Why? Because we start with NAV. We don't start with GAV. So for this portion, I don't have to do anything. This is 5,000 and this is 2,500. Anyways, only PGBP is 2,500, 7,500 I'll disallow. Now, fourth point. Interest expenses represent interest expenses. 80,000. Correct? Interest expenses is 80,000. Let us see what they are talking about. This 80,000. Interest expenses represent, it means they are talking about entire 80,000, right? They are not saying interest expense include this amount. They are talking about entire 80,000. That this interest expense is 80,000. What does it represent? Okay. So it represent interest on capital borrowed from a nationalized bank for the construction of the house. Okay. So this is for the construction of the house. Guys, how much? 80,000. Now can I say 80,000 is the interest on loan for construction purpose, right? for construction. Can I say out of this 80,000, my PGBP is 20,000? 25% say yes or no. My PGBP is 25%. Everybody is okay. Out of this 80,000, only 25% is my PGBP. Why? Because only 25% is the house that I am using for my business. Remaining 75% is house property. All okay? Everybody okay with this or not? Tell me yes or no. Correct? Now 80,000 is the total interest. So it means it is total interest for the house. So 25% is PGBP. 60,000 I will disallow because 60,000 is not my PGBP. So I am 100% sure now this 80,000, 60,000 relates to house property and remaining 20,000 is PGBP. So I'm okay with PGBP, but I'm not okay with 60,000. And the 60,000 actually is house property. And how it is? Can I say for let out property it is? Yes, can you tell me how much is for let out property? Let out property is how much and self-occupied property is how much? Please tell me. Help me in filling this question marks. Correct. 50% for let out property and 20,000 for self-occupied property. And guys, we are following default or optional? We are following optional. In optional, we get the advantage of self-occupied property also. In optional, we get this. But in default, we don't get it. Understood? So for 80,000, 40, 20, 20. Now, also remember, guys, in house property, interest is allowed. If you take interest from anybody, interest is allowed on due basis. Whether you have paid it or not paid it doesn't matter. In house property, interest is allowed on due basis, right? But in PGBP, if you have taken a loan from banks, financial institution, etc., interest is allowed subject to 43B. It is allowed subject to 43B. That is, if it is paid up to the due date of ROI, then only it is allowed, otherwise it is not allowed. Have you understood this also? That interest on loan, since you have taken it from bank, in house property, interest is allowed whether you have paid it or not paid it on due basis. House property, interest is allowed. See, in house property, municipal taxes is allowed on cash basis, but interest is allowed on due basis. Correct? But in PGBP, we have section 43B, which contains one of the 7 expenses, interest on loan from banks. It is allowed only subject to 43B. Are you all okay with this also or not? Correct? Okay. Okay. Guys, if I will say, let's say in this question, if I'll say that this interest is not paid, we are not problem, will allow in house property. But if this question says that this interest is not paid, then 43B will disallow it. 43B will disallow it. Why? Because although it's a PGBP expense, but it should have been paid. Correct? So first of all, out of 80,000, which is debited in my P&L account, first of all, I will disallow 60. Why? Because this is not PGBP. So remaining 20,000 is allowed. But if it is also not paid, I will disallow this also. Because it is, although it is PGBP, but it is not paid, 43B will disallow this. Let us see. I think this is what they will say. Okay. Now, I'm reading it again. Santosh, you got it now. Okay, now. Interest expense represent interest on capital borrowed from a nationalized bank. We have taken this loan from the bank. Good. For the construction of the house. Okay. The construction was completed in 2012-13. We have completed the construction way back. So there is no pre-construction also. Pre-construction effect only next 5 years. This construction was completed some 10, 12 years back. We don't have any issues also. Now, neither the loan, neither the loan nor the interest, neither the loan nor the interest was paid till the due date of filing the return of income. We have not paid the loan, we have not paid the interest also. Up to the due date of filing the return, we have not paid it. Please tell me, this 60,000 is allowed, will be allowed in house property or not? It will be disallowed or allowed in house property? I'm talking about house property. It will be allowed. On due basis, we will allow. Very good. Very good. Now tell me about this in PGBP. It will be allowed or it will be disallowed? It will be understood. Understood. Very good. So in PGBP, again, I'm telling you, in PGBP, they have debited 80,000. First of all, 60,000 I will not allow because it is not PGBP. Remaining 20,000 we could have allowed it because it is PGBP, but because of 43B, it is also disallowed. At the end of the day, entire 80,000 will be disallowed from PGBP. Correct? Okay, I believe you understood it. Okay, first of all, tell me notional rent is allowed or notional rent is not allowed? Notional rent in PGBP. What is notional rent? Can you give rent to yourself? No, you cannot give notional rent to yourself. Correct. You can give it to somebody else if it is an actual rent, if you have taken it on rent. Even if you have taken it from your relatives, then also you can pay the rent if it is at fair market value. But to yourself, you cannot pay. Guys, if in this question they will say that assessee has debited a notional rent related to this property, will you allow it? No, because he's the owner. Notional rent should not be allowed. Correct. Fifth point. Based on the actual rent received for unit 1. Okay. Mr. Basin has debited 2,40,000 as the notional rent of unit 2, which is used for his profession. So what he thought is that unit 1 rent is 240. Unit 1 rent is 240. Let us debit this as a notional rent also. Because we are using it for business, so let us debit it. Please tell me this notional rent is allowed or not allowed? Not allowed. 240 which you have debited. So this person is saying that this expense of rent is a notional rent. So this office rent, it is actually a notional rent. We will not allow it. So 240 will not allow it. Why? It is not an actual rent. It is a notional rent. I believe everyone is okay on this because it's easy. Notional rent. The expense on insurance premium. Okay. There was an insurance premium now, guys. See, if it is for our employees, it is for our stock, etc., for our building which we use in business, then we are okay with it. But if this insurance premium is of personal nature, then we will not allow this insurance. Okay. The expense on insurance premium, rupees 72,000 represents lump sum health insurance premium paid by Basin. Guys, it's a health insurance for Mr. Basin itself. It's a personal expense. We will not allow it. We will not allow it in PGBP. We will not allow it. But since it is a health insurance premium, and we are following optional regime, so we will allow it something in 80D. So that we will see in 80D. But yes, we got to know that this 72,000 is not a business expense, it's a personal expense. I believe we are okay with it. So while computing PGB, I'll disallow. In 80D, I'll look at it that how much I'll allow over there. The expenses on professional fees includes a sum of 1 lakh paid to the expenses of professional fees. So there were some professional fees, okay. This one. There was a professional fees of 2 lakh. See, generally it's a business expense, it should be allowed. Now what they are saying, this 2 lakh amount, the expenses on professional fees paid includes a sum of rupees 1 lakh. Okay, they are talking about 1 lakh rupees. They are talking about out of 2 lakh, they are not talking about entire 2 lakh, they are talking about 1 lakh rupees. Paid to Ronak, an Indian resident on which no TDS was deducted. Guys, what you will do? It's an important adjustment. Many times examiner keep on asking it and it's very easy. We have paid it to someone without TDS. What you will do? Only 30% allowed? No, Santosh. Opposite. See, it is paid to resident, right? It's paid to resident. Santosh, it's opposite of it. Only 70% allowed, 30% will be disallowed. 30% would be disallowed. Correct? 30% is disallowed. Correct? How much? 2 lakh 30% or 1 lakh 30%? 1 lakh 30%. That 2 lakh, out of that 2 lakh, there is a problem with 1 lakh. Remaining 1 lakh, we don't have any problem. This 1 lakh has a problem. So 1 lakh was paid without TDS, 30% we will disallow. Okay. There was only one block containing computers, okay, which came into existence on 2nd April 2024 when new laptop of 160, printer and scanner for 40 were purchased. There was only one block. Okay, so he doesn't have any other assets except computers. Guys, he has charged depreciation on computers 120. So now they are giving this information on depreciation. See, if there would have been no information on depreciation, I would have said 120, I'm okay. I would have said 120, I'm okay. Now they are giving some information regarding depreciation. So what I'll do, simply to put it, this is the depreciation as per books. I will not allow it. I will not allow it. So I will disallow this first. Simply, I'll disallow this first. And then as per the information, I will take the depreciation. So there was only one block of computers containing computers which came into existence on 2nd April 2024. Yes, 2nd April 2024, they are indicating that whether you have to charge full depreciation, half depreciation, full depreciation. Correct? You have to charge full depreciation. When new laptop of 160, printer of 40,000 were purchased. Okay. So 1,60,000 plus 40,000 printer. So 2 lakh are the computers and computer accessories. He charged depreciation 60% on the entire cost of 2 lakh and debited to the income and expenditure account. So this person has charged depreciation of 60%. So what we will say, no, 60% is not correct, 40% is correct. So what you can do is simply, you can disallow that and you can allow 40%. 80,000 rupees. Understood? You can do the difference also. You can do the difference also, or simply to put it, just disallow that and allow 80,000. That's it. Had it been from 4th October or onwards, I would have charged half depreciation. But right now it is in April, so I'll charge full depreciation. Simply, I'll disallow that. I'll allow this. Okay, Mr. Basin has also taken a loan of 5 lakh from a nationalized bank for higher education for his son. During the financial year, he paid interest of 75,000 along with 40,000 interest. Okay. This amount is not reflected in the income and expenditure account. See, this is important. This amount is not reflected in the income and expenditure account. So what he has done it over here is, he has taken a loan for education. So we understand he is following optional regime. So 80E will provide. 80E will provide for the interest on education loan. And he has not debited in his income and expenditure account. Good enough, because it's not a business, it's a personal thing. So if he has not debited it, so it is not disturbing my P&L account. So in PGBP, I will not make any adjustment because it is not disturbing my P&L account. See, they are saying now this amount is not reflected in the income and expenditure account. Good enough, because it's your personal. You should not record it, and he has not recorded it. So it's not creating a problem with me. But yes, in 80E, I will take the deduction with respect to only the interest. Only the interest. I will take the deduction. They are saying that he repaid principal of 75,000 along with interest of 40,000. Guys, in 80E, we get only in 80E, we get only interest. Education loan, only interest. What about principal repayment? No, we don't get deduction of 80E education loan or principal repayment. Now there in your mind, you might get principal repayment was there in 80C, but that is for housing loan construction or purchase, not for any other loan. Please remember 80C, 1,50,000 deduction is available when you repay the loan. The principal repayment is allowed, but only and only for housing loan, not for any other else. And that too only for purchase and construction. In 80C, I'm again repeating, in 80C, if you have taken a housing loan for repair, you have taken a loan for repair, renovation, reconstruction, you will not get even 80C. 80C is only and only for purchase and construction. That's it, of the housing loan only. So here they are confusing you. So some students will get confused that, okay, sir, we have paid principal repayment also. Let us give 80C. No, please remember, it is only for the house, purchase, construction. That's it. Quite a big question. Okay, so let us quickly do it. Question number 2. Computation of total income and tax liability of Mr. Bhasin assessment year 25-26, and he is following optional regime. He is following optional regime. Okay, now 5 heads elimination. Do we have salary income? Do we have salary income? Yes, because of clubbing. Do we have house property income? Yes. Confusing house property. Yes, we have. Do we have PGBP? Yes, we have. Do we have capital gain? I don't find capital gain anywhere. Capital gain was not there. IFOS income was there. These are there. IFOS income was there or not? Winning from lottery, etc. was there. Winning from lottery, interest on saving account was also there. So 80TTA is also there. 80C is also there. 80E is also there. So let us find out. Okay, lottery and interest on saving. So we have all except capital gain. Correct, Darshni. So we have all except capital gain. Salary income. This is, guys, you don't have to write stories. See, I have taken some 40-45 minutes to explain the entire question to you. But in your examination, you will do it within this, all this thing which I have discussed with you in just 5 minutes. You will get to know that what is the question is telling you. And then to present it, you will be taking maximum. See, I'm telling you, after we have done some 5 or 6 questions on total income, next time you will pick up any total income question, you will end up doing it in less than 25 minutes. I'm telling you, if you are doing your homework regularly, you are doing these sums regularly, after 4 days, you will be able to complete your total income questions in maximum 25 minutes. In maximum 25 minutes, you will be able to complete. But please, you have to be just regular in this, right? At least 10 questions. If you have done, you are perfectly comfortable with this question, with this total income question now, and you will perform well. And actually, if you are good in total income question, it means that you are good in the entire concepts. So even I know that some of you might be remembering the provisions, some of you might be forgetting the provisions also. That is completely fine. So this is how we'll able to recall the provisions. So today we have discussed something. So now all the provisions are become fresh in your mind. So this is how we recall the provisions, right? So don't worry about it. Just keep on doing it. Okay. Salary income. See, you have to complete the question within a time limit. You don't have to write stories. You just have to intimate to the examiner that boss, I know it. Salary income, clubbed, clubbed income after standard deduction. After standard deduction, so 3 lakh minus 50,000. See, he's following optional regime, so I'm taking 50. If he would have been following default regime, I would have taken 75. 2,50,000. Now, house property. Guys, I think it would be better that if we make a note for house property, correct now? Because now we have one self-occupied also, one let out also. So you cannot do it right in here. So I think that we should make a note for house property. Then we should make a note for PGBP. Others is not required. House property. So let us make a working note number 1. House property. We are following optional regime, correct? %50 let out portion, 25% self-occupied portion. And we know that there is a fixed format for house property. It's just a 5-6 lines format. We should know it. We start with GAV minus municipal taxes paid. We get NAV. Then 24A, even if you don't remember the section number, just mention standard deduction. 24B, interest on loan. And this is your house property income. Simple format. Now the GAV for the let out property. See, let us do for self-occupied first. See, self-occupied, we start with NAV, NAV nil. We don't take GAV or municipal taxes for self-occupied. If this would have been default regime, I would have taken nil, 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 nil. That's it. No interest on loan is also allowed in default regime. But in optional, it is allowed. And if you have taken a loan for construction or for purchase, so maximum limit is 2 lakh rupees, right? In self-occupied. For let out property, there is no limit for interest. For let out property, there is no limit for interest under both the regimes. Under optional regime, it is 2 lakh maximum only for repairs, only for purchase and construction. For other things, repairs, renovation, 30,000 is the limit. And optional. Under default, even you don't get anything. Under default, you don't get anything. Okay. So standard deduction is 0. And there is also interest on loan. So remember 80,000 was the interest. So 25,000 is related to this. 20,000, sorry. Are you all okay? 80,000 was the total. So for 20, this is 25,000. So sorry, 20,000, correct. 20,000 would be the loan. And up till 2 lakh, we are okay with it. Up till 2 lakh, we are okay with it. So this is actually is giving me a negative house property 20,000 rupees. Correct? Okay. GAV, expected rent was, we calculated 4 lakh for the entire one. So now here it will be 2 lakh. And actual rent was 20,000 into 12, 2.4 lakh. So whichever is higher, it is 2 lakh 40,000. Okay, tell me how much was the municipal taxes for the entire house was 10,000 rupees, right? 10,000 for the entire one. So for here, it would be 5,000, correct? So it would be 50%, 5,000. So it was 10,000. I think I should show you. It was written somewhere. Rates and taxes include 10,000 for the entire house. So for this, it would be 5,000. So NAV becomes 235. Standard deduction 7,500. And interest on loan 40,000. 80,000, 50%. Or you can say double of this. One lakh 24,500. Now we have 124,500. Correct, Darshni, Aditya, correct. And we have 20,000 rupees loss. House property one can be set off from house property to no problem. Even in default regime, house property one can be set off from house property to no problem, right? But yes, obviously self-occupied property in default regime would be 0. So my house property is coming as total is 1,04,500. I'll take this to my main answer. One lakh 4,500. Then we have PGBP also. PGBP, I'll make a working note number 2. Then we have IFOS also. Let us complete IFOS first. IFOS, we have interest from saving account. Interest on saving account was 25,000, right? It is 25,000. And remember, we have to give TTA also, optional regime. And there is lottery winning also. In IFOS, I'll take the gross amount 1 lakh. Correct. 1 lakh. I can show it also. 99,500 plus cost of lottery ticket 500. I'll take it as 1 lakh. So my IFOS is 125. So this is my GTI. And from gross total income, I believe everybody has done till here. PGB will calculate. Now from gross total income, we have less chapter 6A deductions. So in this question, see 80 TTA was there, but before that, I believe actually 80D is there. He's paying health insurance. We'll calculate how much would be the 80D. 80D is there. 80E is there. 80TTA is there. So we'll calculate 80D also later. 1 or 2 line you can leave. 80E is there. And 80 TTA is there. If you'll found anything, then we'll take that also. So 80D, 80 and 80T is there. Correct? 80C is also there. Sir? Did I miss anything? TC. What was housing loan repayment? He has not made no repayment. He has not made any repayment. It's given na that he has not made any repayment. Neither the loan nor the interest was paid. So he has not made any repayment. So how can we give him 80C? Housing loan, he has housing loan, but he has not made any repayment of the housing loan. Nothing is given about the repayment. There is a repayment of education loan, but education loan is not there in 80C. Only housing loan is there. So housing loan he has, but he has not made any repayment. So will not take. Correct? Everybody understood now? Okay. Let us find out our PGBP. Working note number 2. After this house property, you can see. Everybody, please remember 80C is payment based deduction. Unless until you don't make payment, you not get it. 80C is payment based deduction. See the deduction. If you are not making payment, how can they give you 80C? Let's say your LIC premium is due, but you have not paid. They will not give you 80C. It should be paid first. Second, PGBP note. So let's start with net profit as per P&L account. Uh, 36,97,500. We'll look at our debit side. Employer remuneration. As of now, we are just looking at our debit side. Normally, I'm not taking any of the information that I'll take in step number 4. Employer remuneration, although there was something, but I'm not taking it. Office and admin expenses, okay. Rates and taxes, right now I'm okay with it. Interest expenses, office rent, although it is notional, let me keep it for step number 4. Insurance premium, although I know that it is for personal, let me keep it for step number 4. Professional fees, okay, I know that there is a 30% thing, let me keep it step number 4. Depreciation on computer, okay. As of now, in the debit side, I don't find anything unless and until I go to the information. On my credit side, 60/60, I was okay perfectly. Interest on saving bank account, no. This is IFOS. Winning from lottery, this is IFOS. Rent received, this is house property. So I will delete these 3. So I'll delete these 3. Correct? This is step number 2. I didn't get anything. Step number 3, I got these 3. So I'll delete whatever is sitting in my P&L account, whatever is disturbing my P&L account, I will delete it. Less saving account interest, lottery, rent of house property. Saving account was 25,000. Lottery was 99,500. Although it was 1 lakh, but what is disturbing in my P&L account is 99,500. Rent of the house is 240. Step 3 done. Step 1 net profit. Step 2 expenses. As of now, there is no problem with the expenses side. Step 3 income. So I found 3 income which is not PGBP. I deleted it. Now let us come to step number 4. Step number 4 says employee remuneration includes 3 lakh rupees, which is as per the market standard. So we will not do anything. We will not do anything, but we will write it. We will write it over here. Salary paid to, either you can give it as a note or you can show it here. Salary paid to spouse. It is as per market rate. So you will not do anything. So now you don't have to show the note also because now you have written it over. It is as per the market rate. So you will not do anything. No adjustment required. Now guys, you don't have to show the note also because you have shown it here. Mr. Basin owns a big house. So it was all the information related to house property. I think nothing is disturbing in my P&L account. Second point was purely for house property. So it is not disturbing me. Third point, rates and taxes includes 10,000 paid as municipal taxes for the house. So we understand 75% of it is for house property. So I will disallow 7,500. Remaining 2,500 we have paid. That is for business. So municipal taxes, I will add municipal taxes. And guys, it's a good practice that whatever is you are subtracting. So don't, if even if you have written it here incorrectly, less or red, it would be a good practice that whatever you are subtracting, please show it in negative and show it in brackets. If you don't show in brackets, you might end up doing a mistake. You might end up doing a mistake. So what you are writing over here, that is not relevant. What is relevant is your end answer. So please, to avoid the mistakes, it is better to write this in negative. Okay, add municipal taxes for house. So 75% of 10,000, 7,500, I'll add it back. It is debited. I am adding it back plus. I will not show it as negative. It is plus. Interest expenses. Now, 80,000 was the interest expenses. 75% is again for house. So first, I will disallow 60,000. Add interest of house. 75% of 80,000. 60,000 I'll add back. And then remaining 20,000, which is for PGBP, I should have allowed it, but the thing is, it's not yet paid. So interest not paid up to due date. So I will disallow remaining 20,000 also. So on and all, entire 80,000 is disallowed. I believe that we are perfectly okay with this. Now, interest we have done. Based on actual rent, he has debited 240 as notional rent. So notional rent should not be allowed. And he has debited it. So I will add it. Notional rent. Two lakh 40,000. It is not allowed. Then, fifth we have done. They are now saying expense for insurance premium 72,000. So 72,000 we have seen that it was debited insurance premium and it's a health insurance premium. So we'll not allow it. We'll see in 80D. We'll see in 80D about it. So again, insurance premium. It is personal. It is not a business expense. 72,000 I'll disallow. Then the expenses of professional fees, 1 lakh is paid without TDS. 30% I'll disallow. Professional fees without TDS. 30% of 1 lakh. 30,000 I'll disallow. Then we have done with this. Depreciation which was wrongly charged. So what we can do is we can add back the depreciation which is debited. And on 2 lakh, we will charge 40%. So how much they have debited? Either you can do it the net amount also, or you can first of all simply disallow this 120. Depreciation as per books 120, and then subtract depreciation as per section 32 or income tax. You can write 2 lakh 40%, 80,000, and please show it in negative because now you are subtracting it. So 120 you have added it back. Depreciation you will allow it. Then any other thing? Haseen has taken a loan for education and which is not reflecting in income and expenditure account. So it's a personal thing and it's not disturbing my P&L account. So I need not to worry about it. I think everything is done. So tell me his profit. What do you think it is? Do the calculations, please. 3802,500. Okay. Thank you. 3802,500. This is PGBP. Okay. Santosh Darshni. 380. 38 lakh 2,500. Aditya. Correct. Good. Very good. Pradeepa, Raju sir. 38 lakh 2,500. Correct. 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 So let us take it in PGBP. 38 lakh 2,500. 42 lakh 82,000. Okay. 4282. Correct. Now chapter 6 deductions. 80D. So 80D was related to our health insurance premium. See, this person is not a, we understand, if you remember health insurance premium, 80D, only in the optional regime, we are following optional. There are two categories for self, spouse, and children. Children should be dependent over here. See, in 80C, life insurance, children can be dependent, non-dependent, but in 80D, children should be dependent. So for self, spouse, and children, 25,000 is the limit. For parents, parents can be dependent, non-dependent, 25,000 is the limit. Any of them as a senior citizen, then the limit will go from 25 till 50, right? Preventive health checkup, 5,000 is allowed overall. Now, regarding health insurance premium, I think we have discussed it earlier also. Again, I'm discussing it with you. The expenses on insurance premium is 72,000, represents lump sum health insurance premium paid by Basin for 3 years. Guys, I have told you about the 80D thing. When we pay it for more than 1 year, it is for 3 years we have paid. So we have to see that for how much we will do it proportionately. And here, should you divide it by 3? No. You should see that how many previous year are getting affected. You should divide it by the relevant previous year. Everybody remember this? You should divide by the relevant previous year, the number of previous year which are affected. So it is from 1st July 24 till 30th June 24. 1st July 24. So July 24 is falling under the previous year, 24-25. And it is going till June 27. June 27 is previous year, 27-28. Agree now? So this is affecting my previous year, 27-28 also. And obviously, what is the previous year which is coming in between, it will also be considered. So 25-26 and 26-27, 27-28. So it is actually 4 relevant previous year. Do you all remember? I talked about this. So it is 4 relevant previous year. So 72,000 divided by not 3, it should be divided by 4. So here I will take divided by 4. 72,000 divided by 4 is 18,000. And for whom he has paid for himself, spouse, and 2 dependent children. So we are okay with it. First category maximum 25,000 we can give, 18,000 we can give it normally. So it would be 80D would be 72,000 divided by 4. What is 4? Number of relevant previous year. So this is 4. So it is 18,000. 18,000 we will get. Maximum it is 25. So we have no issues with 18,000. We have no issues with 18,000. 80E, interest on education loan. Self, spouse, and children it is allowed. So it is interest on education loan was 40,000, right? It was 40,000 rupees. Not the principal repayment. It was 40,000. Then Very good, Darshni. So 80 TTA is for saving account interest. A, your saving interest, or B, rupees 10,000 is the fixed limit, whichever is lower. I think saving interest was how much? 25, na? 25 or 10,000, whichever is lower will get 10,000. So we are getting 42 lakh 14,000. 42 lakh 14,000. Everybody is okay with this? Now, let us compute the tax liability also, because they are asking us to compute the tax payable. They are asking us to compute the tax payable. So first of all, compute the tax liability on this. So tax on above, you have to see your special income. Does it have 111A? No. 112 long-term capital gain? No. 112A equity shares, equity oriented units, long-term? No. It has casual income. It has casual income of 1 lakh. Is it 107670, Raju sir? Okay. So on casual income, 1 lakh, we have the casual income, 30% is the tax, 30,000 rupees. And on remaining, we'll apply slab rate. Slab rates on remaining. So remaining would be, I believe, 41 lakh 14,000. We'll apply the slab rates. You can directly do it in calculator or in rough, and you can directly write the amount over here. So I believe it is 10 lakh 46,700. So you say you're correct. The total comes to 10 lakh 76,700. Which one is slab rate? 2.5 lakh. It's a optional regime. He's not a senior citizen. 0 to 2.5 lakh, 2.5 lakh to 5 lakh, 5 lakh to 10 lakh, 10 lakh and above. There is no surcharge. Why? Because the total income is not more than 50 lakh. Plus 4% health and education cess. 41868. 10 lakh 88,568. This is called your tax liability. Don't round it off right now, because we have to compute the tax payable. We'll round off the tax payable. Oh, have I made any mistake? Then correct. Correct. It is 11 lakh 19,768. Now, this is a tax liability, and if there is any TDS or TCS, etc., or advanced tax, then we will take care of it. So there is a TDS on lottery. See, obviously, we understand if we get a lottery more than 10,000 rupees, 30% is the TDS. So it is 1 lakh rupees the lottery. So TDS on lottery, 1 lakh at a rate of 30% would have been deducted. 30,000 we can subtract it from here. 10 lakh 89,768. This is the tax payable, and now you can round off. Round it off. 1089,770. Very good. Dashni, Aditya, Raju sir, very good. All done. Very good. Good. Okay. So let us keep these two questions for today. I'm giving you the homework. Those who don't have this file, I'll share it with them. Don't worry. So question number 1 and 2 we have done. I'm giving you question number 5 as a homework. Question number 5 is your homework for today. This is the homework. TDS on lottery is not an assumption, Raju sir, because actually, because we know the TDS chapter also. And on lottery, if it is more than 10,000, so we'll get, we have to deduct TDS. So obviously TDS would have been deducted for us, right? It's not an assumption. Actually, it's a fact. Okay, bye-bye. Take care. See you tomorrow at 7:30. Bye. Take care.